One Paul here. Today I'm going to be going over the final strategy of this combo strategy. If you haven't watched the first two parts, definitely check that out. The first part we covered, and we used the 9, 90, 95 method, and just definitely check out that video because that's the first part. And the second part was the Andean oscillator, which is a very popular method. I talk about it often on this channel. And this last step here is we're going to put in some more moving averages, but since we already have some moving averages, with the 9, 90, 95, we're going to have them shown a different way, and that's more towards the bottom. This is towards a moving average combination that is pretty popular out there, and that is the 1348 strategy. So we were going to be incorporating this on a more visual level. And when you plug in all three of these indicators, they kind of help show you the direction of where everything's going and kind of the right trades to enter, and it also shows you kind of the strengths and weaknesses of everything. So I'm going to be showing you guys the final step, which is the 1348 strategy. It's very popular on YouTube. I've talked about it a couple times, but we're going to see how we put all these together, how it can actually help find you some pretty good results. Okay, so if you haven't watched the last two videos, definitely watch the last two videos where I go over the 9, 90, 95 formula for the first part up here. And then I also go over the Andean oscillator. I go over a lot on this channel. The next part here is pretty simple. You just go to it's also called the difference of two moving average. It's made by Spuzzy. So you want to hit that one. And it's going to look like this. So what you basically want to do is you want to change your settings. And you want to go to the first one here on line 1. You want to go to 13. The next one you want to do 48. 1348, it's a very popular strategy on YouTube. There's definitely a channel that goes over this. They center around talking about this formula, so I would definitely check out their channel and what they offer. It's one of the first trading strategies that I came across when I first started trading, so it's definitely something that's going to be included in the strategy, because after all this time, it's actually a strategy that actually works really well. And the only reason why we're putting on the EMA difference here is because we already have our 9, 90, 95 up here at the top, and that's meant to find, it's easier to find the signals when you focus on the 9, 90, 95. And basically what you want to look for in this strategy is you have to find something that basically checks off on all three of these. So first you want to look at the 90, the 9, 90, 95 and see if the lines are crossing. If the lines are crossing, that's a good signal. And then you also have to check it with your Andean oscillator. As you see right here, you see it crossing right here. And then you have to go with your 1348, and it has to look like it's crossing as well. So all three of them, if they're not all going to be in sync with each other, but they should be pretty close if it's a good trade. So like we see right at this point right here on the hour chart, you see the 9, 90, 95 crossing, you see the Andean oscillator crossing with the bearish line, and you also see it crossing with the 1348. This is the sign of a good trade right here. So what you want to look at when you're looking at your 1348 is you can pretty much tell if something's weaker or strong. Like right here, you see the signal of, because nothing's crossing right here. You see it go from red to green, but you see nothing is crossing up here. The 9, 90, 95 is not crossing right here, so you know that this is a bad trade to do, because you see that that's very weak right here. You can see that the momentum of going up is very weak. So what you want to look for is, and we'll go back, we'll look at a couple here. We'll look at a couple moments. The first thing you want to look for is for the 990-95 to cross. The next thing you want to look for is you want to see if it's crossing with the ADN oscillator. And the next thing you want to look for is if it's changing on the EMA difference. So you want to make sure all three of those things are being checked off. Like right here, what we see a cross with the 990-95. We see it happening with the ADN oscillator. And we see it crossing. This is a cross of the 1348 as well. So this will show you, and the 1348 on the EMA difference will show you visually on how well it's doing and how strong it is. So the whole purpose really of the EMA difference, even though it is 1348, is to show you how strong it is, how strong the trade is. So basically, you can get in your trade. You can get in right here because that's where the 90-95 cross. You also see it happening with the ADN oscillator, and then you could follow it with the 1348, and you can see where it's getting weaker. You can see where it's starting to get weaker. Now you can look at your ADN oscillator right here, and you can tell that it's starting to cross or it's starting to retrace at this point. You can get out right here, or you see it getting weaker with the 1348. It's a sign to get out. So let's just look at a couple of examples here. Okay, so right here we see a downtrend. Right here we see a downtrend, and we also see it crossing. We see the downtrend crossing with the ADN oscillator, and then we also see it crossing with the 1348. 3 confirmations right there that this is a good trade to do. So you would come in here and you'd wait it out, and your ADN will basically tell you when to get out, but you also see it getting kind of getting weaker with your 1348 EMA difference here. So let's just look at a couple more times, and I think you guys get the general idea of this strategy. It's very simple when you plug all 3 of these in. We'll look at a couple. Maybe I might do a couple other. Actually, I'll cover one because I really want to go over the strategy again with different assets to show you how it works for different assets. So we see the 990-95 crossing right here. You see it cross. You see it also crossing with the ADN oscillator, and you also see it crossing with the 1348 visually here. If we plugged, I don't know if it's going to show us, but if we plugged in the EMA difference, we don't necessarily. We could probably make this a line. Let's see, EMA difference. Yeah, we can make it a line. Well, you can even make this a line if you want to. That's up to you. But it's up to you if you want to use columns or histograms. But basically, when this turns bright green, it's when the 1348 is crossing. So if it turns bright green, the 1348 is probably crossing. And then you see it go bright red right here, and that's when it's crossing again. So when it turns bright green or bright red, that usually means it's crossing. So whichever way you want to do it. But personally, I'll go with the histogram. Go to histogram. It kind of visually looks better. But you could do a line too if you wanted. Let's look at a couple of examples here. Now, right here we see that the downtrend is weak. You also see that with the ADN oscillator because it's not crossing. And you also see the 990-95, they're not crossing either. So you know that's not a trade to go in. Now right here, now you see the ADN crossing, and you see it crossing with the 1348, but you don't see it crossing with the 990-95 because it's already crossed. So I focus on the moments when they cross, when all three of them are talking to each other. Let's just do it a couple more times, and I think you guys get the general idea. So right here, we see the 990-95 crossing. We also see it crossing with the 80 oscillator, and we also see it crossing with the 1348. So this would have been a good trade. If you came in right here, you would have been able to ride it out, and you'd be able to get out. And you could basically follow the 80 oscillator because it has not crossed down. And you can follow it up to about here, which is a good trade. Now right here in this example here, you see that the 990-95 is not exactly crossing. So this would not be a good trade. And you can also see how weak it is with the 1348. So you can tell with the 1348 how weak or strong something is. So let's just go back and look at a couple more. Right here we see the 990-95 crossing. And right here we see it crossing with the bearish trend on the 80 oscillator. And you also see it crossing with the 1348. So that's a brief one right there. So right here you see the 990-95 crossing. You also see it crossing with the 80 oscillator, and you also see it crossing with the 1348 with the EMA difference. The first thing we do in this strategy is you have to check that the 990-95 are crossing. If it's not crossing, I would not participate. I will not participate in any kind of trade until I see the 990-95 cross. That is the first step. And then the next step is the other things I have to check off. You see it crossing here. You also see it crossing on the 80 oscillator. You also see it crossing on the EMA difference. Okay, so right here we see it crossing. The 990-95 is crossing. You see it crossing up. And you kind of see it. You kind of see it crossing on the 80 oscillator. It's very weak though. But you do also see it crossing with the 1348. So let's look. I'm going to put this a couple more times. I think you guys get the general idea. Got to find when the 90-95. Now, if you're doing this on the hour, you're probably going to have to wait a while for the 990-95 to cross. We see it happen here. 995 is crossing. You also see it happen with the 80 oscillator, and you also see it happen with the 1348. So this strategy works very well, in my opinion, when you combine all three. When you combine all three, you'll be able to easily detect your trades. If you want to do this strategy for yourself, I'm not responsible for any profit or loss on the strategies on this channel. But if you want to do this yourself, you need to plug in your 990-95, your 80 oscillator, and your EMA difference has got to be 1348. So that's the formula for this strategy, this combo. It works really well. So I've discovered this combo by myself, after going through different formulas. I kind of just been experimenting. And I find that this works out really well. And it works for whatever asset you want to trade. Now, it may work differently for different things. Now, if you do something like the stock market, when the stock market's always going up and then down, up and then down, it's easy to catch those signals. What I'm going to be doing in the next couple of videos is I'm going to be going over this strategy, but we're going to be going over how this works for certain assets. We're going to cover crypto, stocks, Forex, maybe gold, before I stop talking about the strategy, because I want to show how this works for all different kinds of assets, and how this combination can actually benefit people. I find that it works out really well because it helps you find the exact moments to get in. But anyway, I have a Discord. If you guys want to join that, it's for free. You'll be able to interact with me more, and I give you guys my personal signals when it comes to charts, what to look out for when it comes to crypto, stocks, Forex, gold, all that. So if you want that, join my Discord. Definitely check the link below. Anyway, other than that, if you like this video, make sure to hit the like button, hit the subscribe button. I'll see you guys in future videos.